What's up everyone, it's Scotty with MoneyVest. So we've got lots of data to unpack in this video because we got the JOLTS numbers, we got the GDP numbers, the personal income and consumption expenditures. We also got the unemployment numbers today. And of course the markets changed on that expectation with interest rates as well. I am really sleepy right now because it's a little bit past midnight here in Dubai and I've just been running around all day figuring out, and as I'm settling in, and this is my fourth video as I'm recording it, so I'm literally just going to be passing out after this one. So I hope you guys enjoyed, find it helpful. Please make sure to drop a like, and I really appreciate you guys subscribing to the channel and all the other channels that we have: MoneyVest Reads, MoneyVest Europe, and MoneyVest Real Estate as well. So make sure that you check out those channels, and the links are going to be down below for you if you are interested in joining our MoneyVest community and our Discord and Patreon as well. The first week of the month is the best time to join. You get access to all the alerts, all the member benefits, including the private videos as well. And I also want to mention that Monday is a holiday, so it is a long weekend in observance of Labor Day. And we also do have our fundamental and technical analysis courses, as well as the options course, currently 50 to 60% off, coupon code LABOR4 if you want to take advantage of that as well. So that's going to expire on Monday. So after Monday night, these coupons will go away. So it's only valid for 2 to 3 more days, and the coupon code is going to be LABOR4. And the bundle obviously gives you access to over 100 video lectures, everything that I've learned over the years in over almost 9 years of investing, 4 years of actual education in finance, fundamental analysis, technicals, and options. Everything is detailed in that course, right, in that bundle. So that's going to be available if you're interested in, of course, taking advantage of that as well. So starting with the JOLTS numbers, 8.8 million was that actual number, which was obviously significantly lower than the consensus. We talked about it in one of my other videos where I went over specifically that the job openings are coming down, and ratio to the unemployed persons, we're sitting at 1.4, and that number has come down from 2.5 closer to 3. So, labor market is by no doubt getting very, very tight. The economy continues to be on a very strong footing with a 2.1% increase on a second quarter basis for the GDP. Consensus was 2.4, so a little bit of a softer print, but nonetheless a very nice growth on the year-over-year basis for GDP here. And of course 1.7% was the personal consumption expenditure, or the PCE rate for the US. Now going over to the employment situation, so this right here is exactly what I broke down in my other video going over employment, which I think is highly worth watching, highly recommended that you watch and check out that video, because it's going to give you a little bit of an insight as to what are some of the leading indicators within employment that we are focusing on, such as that ratio, which is JOLTS over unemployed persons, participation rate, participating population, unemployed persons. All those things are very important that are not really covered on the surface in these reports, but unemployment rate nonetheless did tick higher from 3.5 to 3.8%. And construction, manufacturing payrolls are still very strong at 16 to 22,000, and overall non-farm payrolls increased 187,000 for the month of August. Now this is where we are. This is how the markets have performed in the last 1 month. So August was a red month for the markets overall. Broadly speaking, S&P 500 was down about 1.63% to be precise. Energy was the only sector that was green, 3.3%. And year to date, it is now flat, right? So it's only up 77 basis points. Not to mention comm services, which includes your Metas and Googles, was slightly down about 43 basis points year to date. It's one of the best performing sectors, up over 44%. In fact, it is the best performing sector, up over 44% year to date. Consumer discretionary includes your Amazons and Teslas, and on the month, again, very flat, down about 75 basis points year to date, up over 33. And IT, which is your semiconductors, your Apples and Microsofts, was up over 43% on a year-to-date basis, second best performing sector in the S&P 500 year-to-date, and of course down 1.3% in the month of August. So that seasonality kind of kicking in, and here we are, September is getting started, so August is in the books, and September is usually the worst month for the market, as we know, from a seasonality perspective, but of course time will tell if we are going to break that streak. The last 3 years, September's been brutal, or if we are going to follow up on that streak and continue to see more downside. But nonetheless, this is the picture for the month of August. The entire market down except for energy, which did really well. We'll talk about crude here in just a minute. Now, August jobs report key stats, 187,000 increase versus 157 in July. 3.8% was the jump in unemployment rate, and average hourly earnings rose by 20 basis points to just a little bit under $34 after already increasing 40 basis points in July. So Caldwell basically says, and I quote, non-farm payroll employment continues to trend down. The average, despite the acceleration in August versus July, the 3-month moving average continues to trend down, owing to in part to today's downward revisions to June and July job gains, and total non-farm payrolls increased 187,000 in August, less than the average monthly gain of 271,000 over the previous 12-month period as well. And for those reasons, of course, market expectations have once again flipped back over to no hikes, and for interest rates to stay where we are, stay exactly where we are, and pause from the Federal Reserve, and then start cutting rates in May 2024. 4 cuts to bring us down to 4.25 to 4.5%. Now, I don't fully agree, as you guys already know my stance. I don't fully agree with the market's expectation of no hikes here, because yes, the labor market is weakening. Yes, we're seeing some softness in the JOLTS numbers, and that ratio and the unemployment persons is going higher. But core inflation is, once again, nowhere near close to the Fed's target, and that's their main objective, is core inflation, core PCE. That needs to come down to 2%, or else the Federal Reserve is going to continue to raise interest rates, or continue to be aggressive. Not necessarily raise rates, but they are going to continue to be aggressive in their policy setting with respect to interest rates, quantitative tightening with respect to their balance sheet as well. So I do kind of somewhat disagree with the market that there are no more hikes left until May, and where this is it. This is how high we're going to be. I think eventually time will tell, but I do expect the Federal Reserve to maybe do one last rate hike of 25 basis points before finally settling in at a terminal rate. So this right here was the day. Tesla year down 5%. I actually sold a covered call a couple days ago. That's up over 30 to 40%. And that's why we do this. That's exactly why we hedge for that downside, because we want to be prepared for when that happens. And 325 strike obviously was November out, and I'll be sharing an update in our Discord here very soon. But energy stocks doing really well. AMD pushing higher, Intel pushing higher, Broadcom and Nvidia were selling off a little bit. Apple, Microsoft, Amazon, Google, Meta, all very, very flat here on the day, but Tesla definitely closing in on a very significant down note. Overall, again, you can see some pockets in the market with respect to comm services, semiconductors, and Tesla, of course, was lower, and consumer defensive was selling off. But of course, energy, the big winner on the day, on the week, and on the month as well. In fact, over the last 1 week, actually, technology and comm services are the ones that are leading the way. But over the last 1 month, of course, energy is still the clear winner in the S&P 500. Now, when it comes to commodities, futures, sugar prices, we got cotton, crude oil, Russell 2000, soybean, gasoline, all pushing higher, with platinum, of course, ethanol, coffee prices, orange juice, all selling off pretty aggressively. And Bitcoin here just a little bit over 25,600, continues to slide lower. We got Ether just a little bit over 1,600 as well. So if you go over to crude oil, there we go. That's what we didn't want to see, and I feel like nobody's going to be talking about this. We're kind of settling into this long weekend. Everyone's going to forget about it, and here we are. This is the highest level crude oil has hit since November of 2022. Why aren't there headlines about this? Like, I'm shocked. There's no discussion. We're literally going back to the same levels where we were back in November and December of last year. And if we get up to over $90, $93, $100 a barrel, once again, well, guess what? Inflation's not going away. Inflation's going to, once again, start reaccelerating. And I think that's might be one of the reasons why, markets were flat today. NASDAQ was, down 2 basis points. We got the S&P here flat, up over 18 basis points. The Dow Jones was up 33. And markets more fixated on the idea that the economy is weakening because the labor market's softening a little bit. So that means no more rate hikes from the Federal Reserve. And it's overlooking the fact that crude oil is on the move again. It is up in the month of August. It's up almost 3%. And of course, in the month of September, it's up almost 3%. In August, it was up over 2.2%. And of course, July, we already know, is up over double digits, 16% gain. And we saw that in the inflation print. So if this continues to rally, if this oil price continues to move higher, well, guess what? Eventually, it's going to be some concerning factor. And not a lot of people are talking about it right now, but eventually I know people are going to come around to be like, oh, wow, crude oil at 90 bucks a barrel? Well, guess what? Inflation's going to start to reaccelerate once again. But we'll continue to watch it, and we'll see where it goes next. But next resistance target's literally at $93 per barrel. Talking about crypto, so Ether continues its slide lower. It's pretty much given back on all the gains that it had after Grayscale's Bitcoin, spot ETF. It kind of won that lawsuit with against SEC, and they are going to start to reconsider the spot ETF. But of course, Ether here selling right back down. Bitcoin also continues to slide lower. Support level is going to stay up at 25,000 for BTC. Now going over to the market, so S&P 500 here. So what do we got? We got 18 basis points higher. So for the most part, basically flat and not really moving anywhere. I'm just gonna wait for this to load. I don't know what's going on this chart. I'm just gonna start once again. Just give me 1 minute. Gotta go over and open the main chart. By the way, all these charts are available through our Patreon. So I basically share all the links. I think there's like 10, 12 different links that you can check out. My TradingView charts and all the analysis and technical analysis on all stocks is going to be available literally at your fingertips with one click of a button. So I share all the charts with you with all the links. So that's also available for our members through Patreon. So anyway, going over to S&P 500 first, SPX, and on the week again slightly flat and selling off pretty much red candle on a green day, so selling off intraday. And again, resistance is going to be sitting put at 4,600, 4,625 for the S&P. Support level at 4,450 down to as low as 4,330, and my fair value in the 4,000s for the S&P as well. The head and shoulders is no longer valid, as I've already mentioned before, but we are certainly starting to stall a little bit in this momentum to the upside. For the last couple of days, we've seen nothing but a red candle for the markets. Talking about the NASDAQ, same thing, starting to stall a little bit. Support level is going to be at 13,800. So this right here is going to be that support level to watch next, and resistance all the way up to 14,400 for the NASDAQ as well. Going over to, 1 second, hold on, there was a bug. Just got to hit that. I got to really start cleaning up this place here. It's only been 24 hours since I moved here, so I got to really start doing shit. Anyway, so going over to Apple, and Apple here on the day pushing up over 85 basis points. So very nice reversal back up from the RSI MACD that was oversold, starting to move up very, very nicely. And resistance is going to stay put at 197, with the support level staying put at closer to 175 for Apple. And again, my favorite value is going to be a lot lower in the 150s, might even be lower in the 130s for Apple. Amazon here, on the other hand, it did get a nice breakout about 137, and it actually kind of validated that support today. So all resistance now starting to act as a new support for Amazon, roughly at 137. And of course, next resistance is going to be all the way up to 146 for Amazon moving forward. Talking about Tesla here, Tesla on the day definitely selling off quite aggressively, down over 5%. So this right here is going to be that support level that we are talking about right now. So it kind of got validated on the day today as around 240, 242, and next support all the way down to as low as these green rectangles, and roughly at 200s, low 200s to as much as 225, 228 for Tesla as well. So again, I'll be looking at selling some more calls if it does rally, but bottom line is that Tesla is coming up to some of the very, very important resistance levels in the 290s, 300s, and 320s as well. So I've already done a video on Tesla going over what exactly I'm doing. Talking about NVIDIA here, so NVIDIA on the day also just down about 1.7%, so starting to pull back a little bit. Again, we've talked about the valuation, we've talked about how expensive the stock price really is. So keeping that into mind, we do have a lot of, in my opinion at least, the marginal upside is just not worth the significant downside risk that NVIDIA carries, right? So the risk reward certainly is very, very tilted in an unfavorable manner for NVIDIA. Talking about advanced micro devices, and AMD here continues to basically have this downtrending channel, but had a very nice move to the upside on the day today. 3.5% was actually one of the very few stocks that rallied quite a bit on the day today. So support level is going to stay up at $105, $106, and of course we've got a resistance sitting all the way up to as much as 120s. I would put down first, all the way up to as much as 130s. And AMD, long term, I'm a huge believer, and of course we'll be looking at restarting that position at better prices in the low 80s for advanced micro devices. So talking next about PayPal, and PayPal here on the day pushing up 1.7%, so continues to move higher, huge outperformer on the day today. So next resistance and target, of course, is going to be sitting inside this red rectangle at $69 to $70, and of course we do also have a gap to fill for PayPal ever since the earnings have been released. It's been sliding lower, and we got the new CEO announcement as well. But RSI MACD also showing signs of a reversal, and that's going to be that next target and that resistance level to watch. Square up over 90 basis points. So this right here is still the trade idea that we are looking at for Square, target and resistance, $67. That's the one to pay attention to in my opinion, and we've got a very nice strong area of demand and support sitting roughly at around low 50s for Square. Going over to Meta platforms, and Meta here basically flat and slightly down intraday, so resistance still staying put at $299, closer to $300. So that right there is going to be that resistance, and of course support level is going to stay put it down to 257, 258 for Meta platforms. Talking about Netflix here, so Netflix pushing higher 1.4%, so very nice move to the upside for this company. One of the very few names that did actually ended up pushing up over 1%. Actually, only FANG stock that was up over 1% on the day today, but support level is going to stay put roughly at around 410, resistance up to as much as 458 for Netflix as well. So right now we're mostly trading sideways and consolidating in that range. Google, on the other hand, down 40 basis points. Finally, 137.50 is the break even for the buyer on the calls that I've sold. Of course, I've got until September 15th. If it trades back below 135, that would be great. If not, that's okay too. But right now, support level is going to stay put at 131, 132. Resistance all the way up to 144. And we are a little bit more, I wouldn't necessarily call this overbought, but we are certainly up there with respect to the RSI and the MACD as well. Talking about Microsoft, and Microsoft just really trading sideways, not really going anywhere. It's been at the same price since May of 2023, so earlier this year. It obviously hit a new all-time high at over 360s, and then basically sold back down. Support level is going to stay up at 312, 313, and right now pretty much in the middle of that range. Going over to Enphase, and Enphase on the day also just selling off intraday, still up 1.74%. So we'll go ahead and put this down as a support at 128, and resistance all the way up to 151 for Amazon as well. For Enphase, guys. You can already tell how sleepy I am. I'm messing up ticker symbols here. But Enphase 151 is going to be that resistance, support level roughly around 128 for this stock. And finally, we got Shopify. Shopify has been on a huge rally recently. It is now overbought. Once again, RSI very, very extremely overbought, with of course a resistance sitting at $66, $67, and you can see that we are starting to stall a little bit. That bullish momentum is starting to fade away for Shopify, considering how overbought it has become after the Amazon catalyst. If it does end up breaking out here, 75 is going to be that next resistance to watch, and of course we got a massive support at $54, $55. So that's going to be it for today. Thank you so much for joining. Don't forget, coupon code LABOR4 for all of our courses. The entire website is 50 to 60% off, even individual courses. If you want to take options course separately, fundamental, tech analysis, whatever you want, 50% off, and the bundle, which is a better value deal, 60% off, and the coupon code is going to be LABOR4, and this does expire Monday night. So thank you so much for joining. Hope you all have a great, happy, long weekend, and as always, happy investing, and I'll see you all in the next video. Take care.